Positive on India, says that it has been insulated from the global market for a long time, but the bull market is unprecedented, calls the Indian infrastructure market a lucrative opportunity for the global funds. Corporate bond issuances via private placement rise to an all-time high in 2023. Funds worth rupees 9.58 lakh crore mobilized. Civil Aviation Minister Jyotiraditya Scindia addresses the flight delays in the capital due to fog, informs via social media that the authorities were forced to shut the airport operations as flights can't operate in zero visibility. Qatar pauses gas shipments via Red Sea after US airstrikes, halts at least 5 LNG vessels that were headed towards the passage at the southern end of the Red Sea. That was a glimpse of the 76th Army Day celebrations held in Lucknow. The Indian Army will observe the year 2024 as the year of tech absorption. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host Pragati Oberoi. On this show, we bring you the market headlines along with national and global updates. But before we delve deep into the show, let's see how the markets fared during the day. My colleague Harsh joins us with a quick wrap of all the market action.
Right, it's been a good day for Indian markets, a great start to the week. We've closed both 22,000, we've breached 22,100 as well. We've closed just below the 22,100 mark. We, in fact, briefly were above 22,100, clocked around 22,115 before closing in there. Good 0.9%, almost a percent higher on the Nifty Bank, as well as 1% plus on the Sensex as well. A solid 750-point rally on the Sensex. Let's quickly look at the heat map where the Nifty 50 is concerned. Largely what you'll see is it was led by tech, oil and gas, and banking. That was the key. And of course, you had the big boys participate, both HDFC, RIL, both of them clocking in solid gains for the day, 2.4% higher on HDFC Bank, 1.6 on RIL. Where the Bajaj twins were concerned, they closed the lowest. You had an HDFC Life, which closed lower. The poor results also inviting some new host of research reports which have led that stock lower. But outside of that, it was a fairly good day of trade. Let's quickly pick up on the contributories. You're seeing largely almost nearly 100 points made by both HDFC and RIL out of the 200 odd point rally that we saw on the Nifty today. In fact, from the bottom as well, where the Nifty graph is concerned, from the bottom as well, we saw a good rally. But outside of those two big contributors to the Nifty, we also had the IT pack chipping in. In terms of the losers, not too many where the Nifty is concerned. The advanced decline looked absolutely flat, 1:1 where the advanced decline is concerned. The Nifty mid cap and small cap also closing higher. But of course, it was largely the larger caps which are performing in trade today, and the advanced decline indicates that. Also, let me quickly switch focus with regard to sectors. It was another day of IT where the sectoral indices were concerned. The Nifty IT continued to gain ground, 1.5% higher on the Nifty IT. The PSU pack was buzzing, oil and gas, energy, all of which were in the green. Nifty Pharma gained 1% or thereabouts. Among the losers, Nifty Media and Nifty Metal were the top losers.
That was the quick market wrap for you. Now, in line with the market action, Tata Consumer shares hit record high on Capital Foods and Organic India acquisition deals. Let's go across to Sesa Sen for more on this. Sesa, what does this mean for Tata Consumer and the companies that it has now acquired?
Right, so we've spoken to Ajay Gupta, who is the founder of Capital Foods, and he had mentioned that one of their investors needed to exit, and hence they had to take the decision of getting in touch with Tata Consumer and selling 75% stake for now, and eventually the remaining 25% within the next 3 years. Now, Ajay Gupta will, in his personal capacity, hold 5%, and it's a dream run for me to hand over the brand to someone like Tata Group. That is what he said, and I quote, Gupta also expects to beat the current growth trajectory, which is about 15 to 20%, and also the estimated FY24 turnover is pegged at 870 crore. Listen into the conversation.
We are going to handle the business. We're going to work on I have spent 27 years in the business, and the Tatas are very gracious that they want to use our knowledge that we have done in the last 27 years on the culinary business specifically, and in the next 3 years' time we exit on the third year. So there are no conditions as such. Every time is a good time. For us, one of our investors needed an exit, and hence we had to do something like this, really speaking. And we also believe we've created iconic brands in Ching's and Smith & Jones. With the help of the Tata distribution, the TCPL distribution, which is close to 10 times larger than us, we'll benefit from this entire integration that happens.
That was the Capital Foods management. Now, HCL Tech also recently announced their third quarter earnings, and NDTV Profit brought you the fastest coverage on that. My colleague Tushardeep Singh caught up with the company's CFO Prateek Agarwal on their Q3 earnings and why the company exactly narrowed down their FY24 guidance. Here's a slice of the conversation for you.
This quarter was certainly a sixer of a quarter. But we don't think we'll be able to hit another six in the immediately next quarter.
Okay.
So we have kind of tempered down the higher end of the range. Instead of 5 to 6%, we toned it down to 5 to 5.5%. I think what is to be kept in mind is 5 to 5.5% is better growth, much better growth than all of our large cap IT peers. And secondly, even to deliver this 5 to 5.5 range, our services business has to deliver 1.6% to 3.5% sequential growth, which is what we are penciling in. And we expect to be in the higher end of that range for the services business as well.
So, Mr. Agarwal, why do you think that the January-March quarter will not be as good as the October-December period? Can you give us some guidance on it, as so to speak?
Very simple. It's the seasonality of the products business, the software business. December quarter tends to be a peak. It has been a peak in any of the last 3, 4, 5 years if you look at it. And March quarter, the seasonality in the software business is not going to be there. It's going to be software is going to decline as it typically does in the March quarter compared to December. So that's the simple reason for that.
Okay, but you are confident about maintaining your operational profitability at 18 to 19%. So what are the margin levers still in play for you for that confidence, sir?
I think our run rate in the last 2 quarters has already built a solid foundation. So we were at 18.5% in the last quarter, and with the software seasonality, this quarter is 19.8. So we are on a good trajectory, and we hope to continue our good run. So we are pretty much in the near the middle of the range so far in the 3 quarters. And with the 4th quarter, we don't expect anything different.
That was HCL Tech CFO speaking to NDTV Profit. Now it's time for an update on the bond market. Corporate bond issuances through private placements touched an all-time high in 2023 with funds worth 9.5 lakh crore rupees mobilized through this. For more insights on this, my colleague Mimansa, who also tracks the banking space very closely, joins in.
Yeah, hi Pragati. So companies as well as banks have increasingly been raising funds through corporate bonds on a private placement basis due to a stellar growth in the credit demand in 2023. But the liquidity conditions which have been in deficit for the last few months have compelled these companies and banks to move to different sources of funding. So corporate bonds have been a go-to avenue for these companies to raise funds. So like you said, the funds mobilized through these bonds were rupees 9.58 lakh crore in 2023. This is 26% higher from last year and at a record high. Even the total number of issuers rose to 920 in 2023 from 863 issuers, with banks leading the pack with issuances worth rupees 4.71 lakh crore. If you look at the private and public sector bifurcation, private sector accounted for 59% of the total amount mobilized through corporate debt, while the government sector was able to secure 41% of the total amount raised. So why private placement basis? Because it is an alternative to an initial public offer for a company which is seeking to raise capital for expansion. And right now the trend is that a lot of banks are looking for diversifying their sources of funding amid deficit liquidity in the banking system.
For that update. It's time for a short break, but we have lots more lined up for you on the other side. So stay tuned. Welcome back. You're watching The Reporter on NDTV Profit. Now straight to an update from Davos. Kedaara Capital's Manish Kejriwal remains positive on India. While speaking to NDTV Profit's Neeraj Shah in Davos, he said that India has been insulated from the global market for a long time. He added that the Indian infrastructure market is a lucrative opportunity for global funds.
The thirst of capital was sort of quenched in the past by the soft banks, the alpha waves of the world. That's drying up a little bit. But the more later private equity like ours, all the global guys like the Blackstones of the world, as well as the markets themselves, will be our largest competitor to private equity. But for the entrepreneur, what a fantastic choice to have. We are in a phenomenal situation right now. So I think there's credibly a significant interest in India. And that interest, I think, is genuine. But now let me peel the thing one more. What's happening, right? When you see what's happening in China, and people often ask, is all the capital that's going to China coming to India? That's not the case. And that will not be the case, right? China has its own place. There is a temporary slowdown. It's also a very large market. There's lots of geopolitical complications. China will be back. So I don't think we can substitute for China. We can be in addition to China. We can take more and more market share from Apple's manufacturing of iPhones into India from China.
That was an update from Davos. Now, recently, the Home Ministry asked the CBI to investigate corruption in the Aam Aadmi Party's Mohalla clinics. Metropolis Healthcare has now clarified that it followed all procedures for medical samples under the project. My colleague Monal joins in to tell us more.
Thanks, Pragati. Yes, so Metropolis is trying to give us a view on what is happening on the backside of the whole Mohalla clinic scam. It said that it has, however, followed all medical procedures that are required to be done on the sample that it has received under the scheme, and that this whole Mohalla clinics samples that come into them are tested based on all the information that is shared with them by the Mohalla clinic. So they are saying that interacting and collecting samples is not in their work, and that is done by the clinics, the front-facing clinics. Their revenue, they've said, is around 4 crores from the whole project from February to December for now, and they've only received around 1.3 crore, and the company is trying to dissociate itself from the project itself, saying that the assignment is not commercially viable, and this is majorly due to the prolonged delays in receiving the dues. So this is majorly what's happening on Metropolis, and on this the stock has also reacted today. It's 3.4% positive. So all in all, we have to see what is going to happen on the Mohalla clinics front, but Metropolis seems to be in the clear.
Right, Monal, thanks so much for bringing us those updates. Meanwhile, on the sidelines of Pixel facilities launch in Bengaluru, my colleague caught up with ISRO chairman S. Somnath, who spoke about the facility and what it means for the private space manufacturing in India. He also spoke about the evolving space policies and the new innovations.
See, with the opening up of the space sector in 2020, and also the release of the 2023 space policy, it enables non-governmental entities and private sector to come into space in all the sectors, building rockets to building satellites, applications, and create business and value in space sector. So today's inauguration of the Pixel's integration facility for satellites, an example of this growing interest in the domain of space in the private sector. Not only Pixel, there are many other companies who have started already the manufacturing of satellites in India. Pixel is not going to manufacture, they have already done it, they have launched it, they are operationalized satellites. But now they are looking at scaling up numbers and more number of satellites to build in Bangalore. I'm really happy to come over and then have part of this celebration of building their new facilities. And I hope that this will be flooded with building of the future constellation of satellites, especially smaller satellites, which they are specialized in, imaging satellites. The point which I said is that it has to create more value. It's not just building satellites. Out of the satellite you get data, and this data must become finally a useful product in terms of delivering some services, goods to the people. And this aspect also they are putting a lot of value and effort in terms of image processing, data dissemination, and making significant impact in the society. I think both these are there in Pixel, and I want to congratulate them for such an initiative.
So what do you see in terms of more collaboration between the government and private entities going ahead in terms of policy changes as well? And overall, what all has happened over the past 4 or 5 years?
See, the policies are very clear. The publicly funded facilities and infrastructure that has been created in space department is at the disposal of the private entrepreneurs for making use of them in case they need some support, especially the technology support, facility support, consultancy. All these are possible today with the governmental facilities. So that's already happening for Pixel. For some of the testings are happening in our facility, some technology transfers are happening, and we will look at it to enhance it in the due course.
That was the ISRO chairman for you. Now, Pixel co-founder and CEO Awais Ahmed also spoke to NDTV Profit on why the startup opens its spacecraft manufacturing facility in Bengaluru.
We are building the world's first constellation of hyperspectral satellites, which in the most basic sense means that we are able to see things at a 50 times richer detail than satellites up in space today are able to do. And that was the mission with which we started. Now, when we launched 3 demo satellites in the last 3-4 years of our inception, we were okay with a small lab where we could build 1 satellite at a time and then launch it. But now that we are entering the period where we need to scale up, we need to launch a total of about 24 to 30 satellites over the next 2 to 3 years, and then expand to hundreds more satellites for ourselves and for different organizations and governments. And for that, we needed a much larger facility. Now, we could have probably rented clean rooms elsewhere, we could have done testing elsewhere. But the reason for having our own assembly, integration and testing facility is it helps control the entire flow of how we build satellites. We can do it much faster, we can do it much more efficiently, and we can do it cheaper. So a one-time investment will mean that we can do 25 satellites, small satellites of up to 100 kilograms at a time here, and we can turn them around every 4 to 6 months. So in a best case scenario, we can turn around 75 satellites per year from this facility if everything is optimized. And that means we have full control of our speeds, our iterations and everything else, which is why it was important for us to invest in this and not be dependent on anyone else for our own timelines.
Last we spoke, you said the government is doing a good job in terms of being an enabler policy-wise. But what is lacking is still a commitment from their end to becoming a buyer, a first buyer, a partner potentially. Are you seeing any progress on that front?
We are. So I think, 2019, 2020 was when the announcement was made for opening up of the policy. And then in 2021 and 2022, things really started to sort of take off from there. What has happened apart from the policy? The first thing is the biggest thing is the policy, because now there's a clear policy. Everyone knows that private companies are to be supported and sort of worked with and so on and so forth. But as you said, in terms of actually creating an ecosystem for buying and selling within the country, there's still some way to go. However, there are programs such as the IDEX program that the Ministry of Defense does Innovation in Defense Excellence or something along those lines, where they give grants to build prototypes, and on the basis of a successful prototype, there is guaranteed procurement at the end of it for many more such things, which was earlier limited to other defense applications such as building ammunition and so on and so forth, or drones. But now it has been extended to satellites, and that's something that we recently won an IDEX grant for last year for building multi-payload miniaturized micro satellites. So I think it's starting. There's still a long way to go.
That was Pixel's management for you, and that's also that we have for you on The Reporter. But for more news and updates, please keep watching NDTV Profit.